Hey guys, Katie here. This is the inaugural video of this series in which I am really just documenting progress towards my progress towards financial freedom or whatever. My progress in life, honestly, is really what this is. My progress is learning how to do new things and learning how to become a better person, learning how to make more money, learning how to generate passive income streams, learning how to be more productive. This is gonna kind of be a jack of all trades podcast for right now until I figure out where exactly I'm going. So bear with me here. I guess right now what I'm really going to be talking about is going to be my financial goals, which is likely because my boyfriend and I are making one of the biggest purchases of our lives, mainly buying a house, which is super exciting, but also terrifying. As I'm sure it was for everyone who has previously bought a house and everyone who will buy a house in the future. Right, and we'll kind of tie that into my entire financial goals over the long term. So, a little bit about myself. I am a PhD student in physics and engineering with two cats, who you can probably see and hear in the background right there. With two cats who I bartend and serve on the weekends to make some extra money. Oh, look at her go. I bartend and serve on the weekend to make some extra money. And I'm trying to put that into other investments that will help me to gain more what people call financial freedom. Right now, I went to a private school I went to a private college, and for the first year of my graduate program, I paid for the program as well as my living expenses by taking out loans. So I have over $100,000 in student loan debt. So for all of you people who are dying out there, I'm with you. And I haven't even really started to be paying it back like how most normal people pay it back. But that's why I'm doing this, is to document all of it, and maybe I can help someone who did the same stupid things I did. So mainly what I will tell you is I'm not a financial advisor. This is not financial advice. I'm just, again, telling you what I'm doing and telling you and reporting back to you guys. So right now, I'll definitely start off with I think the first step that I took towards this was actually realizing how bad it was. So I believe last year, actually the beginning of the pandemic, I say the pandemic changed my life for the better. Not necessarily because we were in, that really fucking sucked, but more so because it allowed me to slow down and take a look at what exactly was going on in my life. Because when you are someone like me who is doing the hustle, working on their school degree, working a side job, 20 hours a week, trying to make extra money, you're trying to buy a house, you have a relationship. I have two cats who are insane. It's super difficult to find time to be able to slow down and take a look around and say, oh, this is where I am. So the pandemic gave me a gift of being allowed to slow down and say, oh, like, this is where I am. So I believe in October of 2020, I started looking at my student loan debt, and I realized that it had grown, that each loan, so each year for each loan is different, obviously, but is a different loan technically, but we consider them all the same. That my loans had grown to my private loans, not even talking about the ones I took out for graduate school, but my private loans for college grew from $40,000 to almost over like $52,000, which is just obscene. And I know I was really upset by this because I was really upset by this because I was under the impression I was at least covering the cost of the interest during school, and that was not the case. So this is one of the most frustrating things for your people who are taking out these private loans, is actually that their interest is that it's kind of a double-edged sword, where the interest payments that you're paying are the interest. If you choose to do, there's, at least my loan provider gave me three options. They gave me in-school repayment, which now I can, as an adult, not just 18 years old, fresh out of college, glowing face. I'm an adult now. The three repayment options were interest, in-school payment, which is your loan will get disbursed, and then a month later, or I believe it may, sometimes they skip a month, but a month later or 2 months later, you start paying back in full. Now, these loans will, for a $20,000 loan, my student loans were at 9% interest. For a $20,000 loan with 9% interest, these payments are going to be easily $300 to $400. And for most of that, it's like any other loan where at first you're paying mostly interest that has accrued. Versus down the principal. And that's an important issue, which I will discuss later, as a possible means to be able to deal with this, to be able to deal with student loans and and hack student loans. The second option is going to be the interest repayment, where you are paying just the interest that's accruing each month. So instead of it being $350, or we'll say on average $350, it'll be $175 that's accruing each month, and you're just paying that down. So when you graduate, you are actually, no interest has accrued. However, your principal is still due there. The last option, which is I'm sure what many people took because they were stupid like me and did not understand how all of this works. I forget what it's called, but it's called in-school deferred, something like that. It's something like that where you're not paying. It's not a normal loan where you're paying the interest towards the interest in the principal. It's not just interest payments. And it's usually some small amount. Mine was $25. And that's all you pay each month during school. And your interest accrues, and your interest will accrue over the entire time you're in school. And when you get out of school, you're making interest payments you're making your payments, and you're making your payments, and for each loan you have to pay, let's say $300. But now that $300 is not going towards both the interest and the principal. It is just going to interest. And this is why so many people got fucked. I have the mouth of a sailor, so I apologize if there are children watching this, or anyone who's offended by curse words. Sorry about that. I've been cursing since I was like 12. I don't know why. My mom would yell at me and my mom would yell at me about it, and I just continued to do it. So, and this is actually why I say, so back to what I was talking about, this is why I actually say the college system as we do it now in America is a scam, because most people are middle class. Most people that are doing this are middle class, and if you're taking out loans to pay for college, it's because you don't have the money to pay for it now. So you're taking out the loans, and you're saying to yourself, okay, well, there's the three options that we just discussed, right? The first option is I'm going to have to work a lot to be able to pay it back. I'm going to have to work a lot to be able to pay it back. To be able to pay back my $400 a month during school, which is not an easy task, mind you. There are some jobs that you can get as an undergraduate that will pay you, the minimum wage in a lot of states is going up, which is great. But even working a minimum wage job, for you to make $400 a week, let's do the math here. Well, 300 divided by 15 is 20. You have to be working working over 20 hours a week, but really closer to like between 26 and 30. We'll say 30 because of tax, depending on the taxes on your state. So if you're going to do that option, you're going to need to be a full-time student and a pretty much full-time worker. Assuming that the minimum wage in your state is $15 an hour, which in a lot of states it actually isn't. Even I live in a very liberal state that has a very high minimum wage, and it's still not as high as 15. So that's one of the issues, is that so the next option, which would be the next option, which is just interest repayment, is in fact cut that monthly bill in half, so it goes from $350 to $175. Okay, great. You're still going to have to be paying. You're still going to have to be working. At that point, I would say maybe 15 hours, probably 15 times 15. Yeah, that sounds about right. And that would, again, you would be taking most of your money and paying it towards the student loan, which means that you don't have any money for those little things, and maybe your parents were helping you or something, that's fine. But a lot of us, a lot of people, myself included, I have been working, non-dependent on my parents since I was 16 for the most part. Obviously when I was 16, 17, 18, I was still living in my parents' house, but in terms of paying my car, paying my car payment, paying for anything I wanted, any new clothes, any food, if I wanted to go out with friends, I would be paying for that by myself. And I think a lot of people, maybe that's just me, but I'm sure a lot of people are also in that same boat. So for most middle-class Americans, what that means is that that when you get to the third option, where you only have to pay $25 a month, that is the sexiest option that you can do when you're going to a school where you're going to be taking out at least, $20,000 a year. Again, I don't know if most schools are, again, I did go to a private school, so if you're going to a public school, it may be closer to $10,000 a year, but $10,000 a year is still an expensive amount. It's still a very expensive amount. That is not any easy money. So, of course, what does most of middle-class America do? They go for that third option because they're told that college is the best route to go, which I think if you want to go into be a lawyer, a doctor, an academic, I think that college is a great way to go. If you're unsure about your life path, I do not recommend going to college, because college now is the price of a house. For reference, I'm buying my house for $400,000, and if I was to pay, luckily the college I went to, I got a lot of financial aid. If I was to pay for it out of pocket, it would have been, 60, 65, 70. It would have been 140. It would have been $265,000 if I had paid it out of pocket, which, depending on your financial situation, maybe you were able to pay something out of pocket or whatever. But the cost of it is now, that most of our parents do not seem to understand, is that is a $265,000 commitment. And when you're 18, unless you know for sure that you want to be a doctor, you want to be a nurse, you want to be a lawyer, you want to be a dentist, something like that, I personally would not do the same path that I did, because even though I'm in grad school now, I was really lucky to have found that path, and I was definitely not heading down that path when I initially went into college. So I can do, and I'll do a whole nother video on choosing your life goals, or however you want to call it. But my point is, if you are in any way unsure, do not go to college. But back to the finances. So most people are going to choose that. And then what happens is they take out one loan for their first year for, we'll say, $15,000 on average. They take the second loan out for their second year, $15,000, third year, $15,000, fourth year, $15,000. At the end of their 4 years, that first loan has been accruing interest for 4 years, completely unpaid, basically. And this is something that I don't think that it's my personal opinion that the student loan companies do not explain this to you well, is that you will be paying none of the principal on that first loan, the second loan, and the third loan, and even the fourth loan when you get out of college, when you graduate. And 6 months after you graduate, unless you're going back into school, you have to start paying, right? So for the first loan, your loan has been accruing interest for 4.5 years, unfettered, if you choose the third option, right? Which I think is where most of us are, unfortunately, in terms of most of us being middle class, most of us knowing absolutely nothing about taking out a loan, and wanting to go to this cool thing, wanting to go with our friends and go be in college, right? So most people choose that third option, and at the end of the 4.5 years, 3.5 years, 2.5 years, 1.5 years, you have 4 loans to pay, all of which have been accruing interest for over a year and a half, completely, basically untouched. You have not made a dent into the interest. You have not made a dent into the principal. You have been paying the $25 a month, just not making absolutely no headway on your loans. So when you graduate, on every single loan, right? And every single loan, you're going to need to be paying. You're going to need to start, show me the money. That's what the loan companies are going to say. So you're going to have at least probably $1,000 a month. I haven't done the exact numbers, but assuming $300 for one loan, $300 for another loan, assuming $300 and maybe like $200, you're probably going to be paying close to $1,000 per month in total towards these student loans, right? And none of that is going to be going to the principal. Now, I know I've said that at least 2 times. Why is that important? That is important because attacking your principal is what is going to make your interest each month go down. So, what's happening in a lot of cases is that you are, in fact, you may be paying $1,000 a month towards your now $70,000 in student loan, assuming $15,000 a year, and assuming that they've all incurred their interest at maybe a 9% rate. It's possible that I got a shitty rate because that's the way the market was when I was in college. Maybe it's cheaper now. Maybe it's closer to like 6 or 7. I don't know. But my guess is the $60,000 has accrued to at least $70,000. So you're going to be paying at least $1,000 a month towards your student loans. And all of that is going towards the interest that accrued. So you have this principal here. write this down. You can tell I was unprepared for this. So, you can see here. So if this is the total loan, this right here is your principal, $60,000. This is what keeps accruing your interest, right? So your $60,000 is going to be growing until you start attacking it. Your $60,000 is going to be growing at whatever rate your loan is at. Mine is at 9. It's ridiculously high. A lot of people now will probably be at 6 or 7 since the interest rates for the last few years have been really low. And what that means is that when you get out, all of your payments are going here to this $10,000 that accrued. But this $60,000 is still generating your interest at 5% a year. So 5% of 60,000 would be 3,000. So at the end of the year, at the end of the first year of you paying your loans, let's say you pay the $1,000 a month, you'll have paid $12,000 on your loan, which is super exciting. Woohoo! Yay! Right? Your loan, because all of that was towards the interest, your loan still accrued the 5%. Again, 5% is a really low number, but for quick math, we'll make it easy. You're still accruing at 5% per year, which means that 5% of 60,000 is 3,000. So even though you paid 12,000 on 70,000, on your 70,000, right? You would think that you would be at 58,000, but you're really going to be at around 61,000 still on your loans. Why? Because your interest accrued, because all that you paid, most of what you paid was towards that interest and not towards the principal. Now, and that's why you'll see a lot of times people will get upset because they'll say these things like, I've already paid $20,000 on my student. I got a loan for $20,000. I've paid $10,000 and I still have $20,000 in debt. What the fuck is going on? This is a fucking joke. And they're right. It's because they did something like what I did, and they screwed themselves over because they were not educated. And I'm not blaming them. I don't think that it's their fault. I think it's the society we live in that has emphasized college as the only route to go in. Whole nother story. Not gonna get on a tangent. My point is, I'm just talking about how I'm trying to go and attack my student loans. So, based on my understanding, once you make your minimum payment towards the student loans, you're allowed to apply any extra payments towards the principal. So, right now, I'm in school, so I only have to actually pay $25 a month. I was previously paying $250 a month because I did, like I said, in 2020, I realized that I had, one loan had gained $5,000, the other loan had gained $7,000. I was like, oh my God, there's an extra $10,000. Like, what the fuck happened? And I realized I had to start attacking it. Great idea, great energy, wrongly directed with, again, even at that point, little knowledge of how loans work and how to really understand how to attack them and deal with your debt in a healthy way. So I'm actually in a really lucky position where my minimum payment now is $25 a month. And what I can do instead of taking that $250 and attacking it and using it to attack the one loan, and attacking it and just doing my auto pay as $250 a month. That's another thing. I was doing it via auto pay, which we all think is so great, But really, what it does is it actually takes away any intentionality into what you're doing. And it is also how they make their money, because if you're just, I'm paying down $250 a month, no big deal. No big deal. You think that you're making a dent, but I was only paying towards the interest, not the principal. And the fact of the matter is, my $20,000, I'm taking one debt strategy, and I'm just attacking one loan right now, so I can focus on that. My loan still accrued $2,000 in interest last year. So even though I paid the extra $200 a month, even though I paid the extra $200,000 a month, meaning that I paid $2,400 over the whole year. Like, that should be great. I accrued $2,000 last year. Now, the way to change that is, as I said I'm going to do, is I'm paying my minimum payments, the $25 a month, and then I'm going to be making extra intentional payments towards the principal, which is actually I think is one of the great ways you can do it. Is basically you're still paying when you get into school, take that $25 minimum payment, which is a great idea, which is great, but still pay $200. And what you can do is basically that your $200, your extra $100 a month, just say, I want it to go immediately to the principal. So that's what I'm doing. That's a strategy that you can do, is basically take any extra payments that you can make over your minimum payment and just apply them towards the principal. And what this means is that each month this my $20,000 will go down to $19,500, and then $19,000, and then, not that I'm going to be able to pay $500 extra dollars, but if I was to pay an extra $500, my loan right now, the one that I'm attacking right now, stands at $24,000, roughly speaking. It stands at $24,000. So if I pay $25 a month, yes, I am only going to be paying $25 a month towards the interest, and that means that $25 a month times the 12 months is $300. I'll only attack $300 of that interest, right? Which seems depressing. However, and it kind of is. It is pretty depressing. However, when I attack if I take the extra $100, $150 that I have every month and attack it towards the principal, I will be able to decrease the amount each month that it is appreciating, that is gaining interest, and be able to decrease that. So I'll be able to, and it's still going to bring down the value of the loan. So, because I am going to be paying it towards the principal. So I'll pay, my plan is to pay an extra $100 a month, which will amount to me paying $1,200 towards the principal of the loan over the course of the year, at least, right? At least. And what that means is that I want to do an actual value, because the loan is $20,000. So if the loan was originally $20,000, it's around $20,000, and I decrease it by the $1,200, that'll be $18,800 times 0.9% times 9%. So instead of it gaining $2,000 in interest, it'll only gain between $1,600 and $2,000. So probably close to maybe like $1,800, which means that I'm saving $200 in my loan. I'm saving $200 in interest, and I'm still paying roughly the same amount that I was previously paying. So Interest is definitely going to be scary for a lot of people. It's absolutely terrifying for me because, like I said, I have a high interest payment. And it's a high interest rate. And it means that each year I pretty much put on $2,000 on my $20,000 loan, which is fucking insane. People, again, like when I was which is fucking insane, and I'll do a whole other video of how I think that the banks and the elites are scamming normal people. But that's for a whole nother day. Thank you so much for listening. If you liked what I had to say, subscribe. I can't believe I'm saying that. I can't believe I'm one of those people. Like this video, subscribe, share it with your friends or not. I don't really care. How about this? If you think someone is drowning, if you know someone who's drowning in if you're drowning in student loan debt and you know someone else who's drowning in student loan debt and you think this has made any sense to you at all, you think that you feel better about how you're going to be able to handle it, just let them know. Be like, yo, this chick's cool. Yeah. So, have a good day. That was gross. I hope no one saw that. I hope no one saw that on my teeth. I hope it wasn't there the whole video, I guess is really what I mean. All right. Bye.